Good morning. Good morning. So today we're here to talk about a transformational force that has the potential to reshape the landscape of financial transactions, and that is the potential of banks and fintechs to partner to grow real-time payments. I am Kim Schwendeman. I'm the Senior Vice President of Payment Adoption with Stacks Payments, and I'd like to take a minute to introduce our esteemed panelists. If you guys could tell us who you are, and what company you're with, and maybe a little bit of a fun fact about yourselves.
Sure, thank you. Oh, this works, okay, cool. Well, for those of you who don't know me, my name is Agrell. I'm part of the Trustly's Banking Partnerships team. I've been part of Trustly for the last, I guess, 5.5 years. I was with the European team for about 3 years, and then I transitioned into the North American team about 2 years ago. I relocated from Stockholm, which is where I'm from, in Sweden, to San Francisco in July of last year. And if you don't know Trustly, we do account-to-account payments. We offer payment and data products to our customers who are online merchants. They use our data products for account validation, for onboarding purposes, and transaction monitoring purposes. And of course, we do payments. So we do deposits, we do disbursements, so pay-ins and payouts. And our primary payment product is guaranteed ACH. Trustly is not a bank, so we need to work with bank partners to connect into the payment rails. And yeah, super excited to be here to meet all of you. Fun fact about me, when I don't speak banking and payments, one of the great loves of my life is yoga. I did a yoga teacher training, so I'm a certified yoga teacher a couple of years ago, right before the pandemic in India. And yeah, super excited again to be here.
Thank you. Good morning. My name is Esteban Marin. Sorry about that. I hope you wake you guys up. And I am the head of payments partnership management at Cross River Bank. So I've been with Cross River Bank for the past 2 years, and in banking and payments for a little bit over 18 years through different banks and partnerships. A little bit about Cross River. So Cross River is a bank that is also a platform for fintech providers. So we are not a traditional or legacy bank where we have branches, etc. We do have a couple, but really our focus is to be the engine behind technology providers and provide them access with innovative API-driven solutions for payments, banking as a service, lending originations, NPLs, etc., and whatnot. A little fun fact about me is that for a period of close to 3 years in my youth, when I used to work at a pizza shop, I ate pizza every single day. And I love it.
Great, that's awesome. Now I'm hungry. All right, so I'm Bryan Schneider, here with U.S. Bank, Group Product Head for our FinTech Strategy and Partnerships. Been with the bank getting close to 4 years. Been in global cash management and FinTech for the past 20 plus years, and set for most of my career in Silicon Valley. And yeah, excited to be here with you today. I guess a quick fun fact, and I think you all know U.S. Bank, we're large financial institution and have a breadth of solutions from consumer all the way up to the corporate commercial bank as well. Fun fact, if you've ever seen Free Solo or those people that climb without ropes, that's what I do. So when I'm in my free time, I go get away and take some breaths and spend time on a rock. So thanks for the. Yep.
Thank you. I can't even watch those videos on YouTube. Like the heights really scare me. Anyway, just to set the stage a little bit, I mean, you guys have been at the conference for the last couple of days. You've heard a lot about real-time payments and really, what the innovation is behind real-time payments and the value proposition behind real-time payments. And so, for those of us who cut our teeth in the payments industry, who grew up here, we've seen this evolution real time, right? And we're standing right in the middle of, a pivot point where gone are the days of, transaction settlement taking days. We're now at, next day funding is ante to play and soon to be the future of real-time payments. And when you think about the benefit that drives to merchants and consumers, the ability to get faster funding, better cash flow, operational efficiency for merchants, and the realization of those true frictionless experiences for consumers that they not only expect, but they're demanding, right? The convenience of payments and payments really being ubiquitous inside of software. That's where real-time payments becomes pivotal. And so as you think about banks and fintechs collaborating to drive those capabilities, they both bring unique strengths to that equation. Fintechs bring the speed, the agility, the innovation, and coupled with banks who bring an established customer base, as well as the regulatory expertise to really drive the right kind of solutions and drive solutions that are built upon cryptocurrencies or open APIs, real-time payments, and really reshape the future of payments. So with that said, I'd like to get a little bit of some insights from the audience to find out how many of you here today are with traditional financial institutions? How about fintechs? Awesome. So I think that this subject matter is probably top of mind for you guys, and so thank you for being here and thank you for joining us. We're going to talk a little bit first, starting out with what are real-time payments. You guys have heard that defined probably many sessions this week, but also what are embedded payments, what are the use cases for embedded payments and the implementation, and then what are some of the gaps that we see in the market. So with that said, I'm just going to, very high level talk about embedded payments, which are the integration of a payments capability into a software solution. And so the way I think about it really is embedded payments are like the engine in the car. I don't think about the engine in my car. I know some people really care about it, but not so much. I just care that it gets me to the mall every time I need to go. And so when you couple that with new capabilities, innovative capabilities like real-time payments, the power and the potential is limitless. So the first question that I'd like to start with I'd like to ask each panelist what their use cases are for embedded payments. And Mo, if you could kick us off, that would be great.
Sure. Well, first of all, I just want to comment on the car comment you made, because my friend is going out of town for like 2 weeks, so she asked me if I could, take care of her car. So I was talking to my friend about it, and she was like, "Oh, well, that's cool. What kind of car is it?" And I just looked at her. I was like, "I think it's an Audi," and that's about as far as I went. Anyways, so the way that our product works today is, I believe, like one definition of an embedded payment. So if I'm a consumer and I want to buy, let's say, a pair of shoes, so I go to the merchant checkout. I pick my shoes, I pick the shoes, I go to the checkout, and then I choose to pay with online banking, or I choose to pay using Trustly. What happens is that our lightbox or our UI pops up on top of the merchant checkout page, and then I choose my bank. So then depending on who I bank with, I either stay within the Trustly experience, or I'm redirected to the bank's page, and that is because of how whether or not they offer an open banking API, essentially. So I identify myself, I authenticate myself using online banking, and then once I've done that, Trustly is able to collect some PII about me, some transaction history, as well as my account information. We run that through our risk engine because, as I mentioned before, our primary payment product is guaranteed ACH. So we run that through our risk engine. We make sure that we feel comfortable guaranteeing that payment on behalf of our customer. And then if we do, we say, merchant, good to go, and then we initiate that payment in the background. So I guess, use case is that is what we do.
Awesome. Esteban, what about you, your company? How are you guys thinking about this?
Yeah, well, so when we think about embedded payments, we have noticed that embedded payments come in different ways, shapes, and forms, and obviously we keep getting challenged by our customers to come up with creative ways to address embedded and faster payments. Specifically, the way that we have addressed this is by providing our partners with access to a centralized set of API solutions that give them options to then use different payment rails and different financial solutions in order to move funds seamlessly and fast across different channels and different areas. Specifically, we have found a lot of success through our Bean sponsorship programs, PayFacs for purchases, ISOs, purchases and payouts, regular, like your normal use cases for payouts, such as insurance, disbursements, etc. But then we started getting into the lending pieces where we can offer secure and fast ways to do the disbursements, in real time, and then help with the collections. Lately, we have gotten very excited seeing some of our partners come up with creating new experiences that really engage with the clients and give customers a better overall payment experience, such as gaming payouts. And we have also seen some of our partners using our rails to increase or raise the financial inclusion by offering solutions such as faster access to wages by using our instant payouts, RTPs, etc. So overall, we think that this is only the beginning, and we really like to see that our partners are creating, as I said, an experience. I think that is the key, just to make sure that, to your point, we don't want people to see payments as a different piece of their overall process. We want that to be part of it. Like to your point, I don't care about the engine. I don't think about it. I just want to hit on the gas and go.
Yep, absolutely. I love the financial inclusion piece, and I think that we'll see many, many more use cases evolve as real-time payments matures. Bryan, what about you?
Yeah, so within global treasury management, we're typically serving corporate commercial clients, and also even in the small to medium-sized business, as well as business banking clients. So embedded payment shows up in a number of ways. We've looked at it from a sense of directly to our clients. A lot of our clients will take our access to our APIs and build solutions themselves. I think in general, we've seen less resources at companies and their ability to, let's say, free up time, resources, and funds to actually do these sorts of integrations or even further development of their application. And so that's where we've also seen, from a direct perspective, we also work with our partners or with our clients to also work hand in hand with partners. So as Moa pointed out as well, from a fintech perspective, I think we've all seen fintechs bring just a tremendous amount of value to the ecosystem, both in user experiences, workflows, industry expertise. That's hard for anybody to be everything to everyone, and so partnering with these fintechs in a way that really meets our clients where they are and how they want to connect has been a really important part of the journey. And one of the aspects that we just actually recently last week launched is around something that we're calling a connected partnership network, and we're going to see more and more, I think, marketplaces out. JP Morgan Chase, I think we saw a recent announcement from them. So I think we're seeing a lot more cooperation and working together and really creating what we call win-win-wins as opposed to win-lose scenarios. So 100% more focus on the customer, what they're looking for, and a little bit more specifically to the question. I think the other thing for us we see a lot of is, I think a lot of us use the Uber in terms of an experience, right? Or the map embedded, or kind of just getting out of the car and making a payment. For a lot of our clients, that might be a dealership, and they want to make a real-time payment on closing a car transaction or commercial real estate. We also see that embedded payment or embedded banking experience showing up traditionally. It's been around for a long time. We're now calling it embedded banking, but our clients have been doing this for a long time within treasury management systems, right? So the Caribas, G-Treasuries, and the like. And then also, I think a lot of us are seeing in the business world things like AP automation and AR automation. So our clients are seeking out more of that embedded payment experience, let's say, within their ERP. And to me, the cool thing is that it's a continuum, right? Our clients are at different stages. Some of them are happy with just online banking, right? And then we've got the more sophisticated that look to do a lot more with APIs and take advantage of the ability to really power applications that make their lives easier in their day-to-day lives.
Absolutely. So we hear a lot. I work with partners every day, and especially like vertically based SaaS companies are starting to hear more and more about real-time payments, and they hear the terminology like FedNow, real-time payments. They're confused, right? What's the difference? And so, Mo, I'm wondering if you could maybe give us some insights.
For sure. So Trustly has been live with RTP Cross River, actually, for the last, I want to say, a year and a half. And we process more than 1 million RTP transactions a month. So quite a big number of transactions, which is super exciting. Having said that, now with having FedNow launched a few weeks ago, I don't think that for you as a payer, be you a consumer or a merchant, I think to the point that was made just a few seconds ago, it shouldn't really matter what rail is being used. The payment should just, you have access to an instant payment, but whether that is processed on RTP or on FedNow shouldn't really matter. So in terms of impacts, I think it should be the same. I mean, you have access to an instant payment. I think the long-term expectation is that the difference will be who the network participants are. But I think that was also discussed yesterday quite a lot. I mean, there are so many banks that are part of both. So even though the rails aren't interoperable, they will essentially be interoperable because there are so many providers, the same way that Trustly now have access to both. So we can route them even on different rails if that's the case. So, but I think the important piece is to look at what are the overall benefits of instant payments rather than looking at, what are the benefits of FedNow or RTP. So, what does that mean in terms of cash management benefits? What does it mean in terms of cash flow benefits? It means you will have access to money quicker, you will be able to pay later, you will be able to have a better picture of your finances overall. I don't want to say no risk of return, but very low risk of return. And then, if that's of interest, if you're a merchant, for example, maybe you want to reduce the number of card payments, there's an opportunity for that too, and because they tend to be more expensive. So, but the short answer is there are definitely many benefits of instant payments, but I think FedNow versus RTP, not a lot of difference.
Fantastic. So back to the engine in the car analogy, it really is just the engine in the car, and the thing that consumers or users of the capability need to think about are the benefits that that capability provides. Fantastic. Bryan, how are fintechs and banks working together to implement client solutions?
Yeah, so we're seeing that happen in a couple of ways, and got a great audience here to speak to this. So one of them is going to be more in what we call a flow of funds. So a lot of our clients may be running into a fintech in the market that really addresses their specific need. And in that case, we want to make sure that we're making those payment rails available to the fintech. Sometimes fintechs want to be in the flow of funds. They're maybe FinCEN regulated, a payment service provider. Or they're just looking to be the one-stop shop, and clients in the marketplace are looking for that. So we want to make sure that we're supporting that model in the marketplace, and I think the other big way is through the API integration. So the model where essentially an end client or company in the marketplace contracts both with a bank and with a fintech. So we see this as a very important model. Unfortunately, with the failure of some of the large banks over the past year or so, we're seeing companies get a lot more curious about who is the bank behind the scenes processing their payments, what is the counterparty risk in working with a particular fintech. So I think that model, the second model that I mentioned, really helps everybody kind of stay in their lane. I hear more and more from fintechs that, hey, we don't really want to be in the flow of funds. You guys do that well. We do the skin, if you will, or the body of the car. You guys do the engine part. And I think it's been a great early marriage in the ecosystem of banks and fintechs working together. So.
Awesome. And then Esteban, what are implementation considerations when a customer is considering an embedded payment solution?
Thank you. So I think that overall, the main thing that anyone needs to look for is that whatever partner you choose needs to have an innovative, experience-centric platform that can provide a robust platform or a robust foundation, for growth. So some of the few characteristics that should be looked for, is that that partner needs to have customizability. Basically, you need to be able to customize the payment needs or your payment solutions in order to not only accommodate for FedNow, RTP, but also look at a broader need that each one of our partners brings us. We know, each one of the use cases will come with a unique set of challenges, either if we are combining ACH with RTP, FedNow, pay-ins, payouts, etc. So that is key that the partner needs to be able to offer that level of customizations rather than a cookie cutter model. As we know, this is more like home-baked cookies rather than Starbucks cookies. The other thing is flexibility, not only from an IT infrastructure support, but also from the being able to accommodate any additional requests based on the uniqueness of the fintech characteristics and the fintech nuances. And the last is take a consultative approach. Make sure that both parties listen to each other, understand the nuances, understand the challenges, understand how to address the uniqueness of your customers' needs and challenges, so then can come up together with a road plan for when the banks and fintechs meet, right? And then make sure that there's a go-forward path for that.
Can I just chime in real quick? We were having a conversation in the hallway before we came in, and we were sharing how, like, from a bank perspective, it's been actually really helpful in the past few years for us to actually have a defined process for how we look at a fintech and onboard and vet a fintech. I think banks traditionally wanted to look at fintechs as either a vendor or a client, and there wasn't so much of a definition around a true partner. So you're not really necessarily paying each other. The focus is on the end client, and that's been a big part for us, is really compressing what sometimes could be a 6+ month journey, or endless. I'm sure it felt like to some clients and partners, but to be able to shift that down to within a month or two is I think a big advance in helping out our partners.
I think so too, because earlier I mentioned the collective strengths that each player brings, right? And so banks bring that established customer base, the regulatory guidance, and the fintechs bring the innovation and the speed. And so being able to collaborate and effectively engage each other and be able to do business together quickly is incredibly important. With that said, what capabilities do banks offer versus fintechs, and where do each of you see gaps in the market? And Bryan, I'm going to start with you.
Oh boy, I think there's the nice thing is we're seeing actually the gaps close a bit. So the fact that the fintechs and the banks are working better together is just a tremendous step forward. Having been in the industry 20+ years, I think you'd see those press releases every year that would say, banks are really seeing fintechs as a competition. They're having their lunch eaten. I mean, we've come kind of in a circular, futile cycle, and I feel like we've kind of pushed out of that and really have focused on the whole is better, right? Like, if we work together, we can really be more successful. And I think software companies have frankly done that for the longest period of time. If you've seen Excel or PowerPoint showing up on Macs, or vice versa, right? We're seeing, I think, the movement much more towards where do you feel safe interacting and who's creating the best user experience. And I think we've all seen buying behaviors change. It was one thing to digitize things, right? Blockbuster, Netflix, but then we all of a sudden saw us buying different things through Netflix or Prime, right? So you can now get HBO through Prime or Netflix. Yeah. And so I think it's going to be interesting over the next few years to see how this cooperation or co-opetition works out.
Yep. Esteban, what about you?
Yeah, so I think that when speaking about banks, based on or waiting by the show of hands, so I saw that we have some people in the room that came from banks and some other from fintech, so I think that I'm going to see some nodding as I say this. But banks will always have a compliance first and centric approach to implementation, right? It is our job to make sure that we provide everything within the regulatory framework. So you will see that from banks. Obviously, fintechs come to the table by creating new experiences. Fintechs are great at creating experiences and developing technologies. Now, as a bank, it is our job and our duty, and we take that to heart to make sure that we can partner with fintechs and we can help fintechs to get through this road and get through this path together in a sure and compliant way. So one of the things that we do that, for example, across River is we build our proprietary core banking platform, COS, in a way where we give our technology partners access to a set of APIs where they can use to access and integrate into a full suite of financial solutions, from loan disbursements, payments, money movements, etc. And then they can wrap their technology around a secure and compliant framework. So I think that is what banks will bring to the table, once again, to help fintechs deliver that experience that they are so good at it. And once again, and to his point, I agree. I think that I don't see banking succeed in the future without the help of fintechs, and obviously the other way around.
Yeah, I love that phrase, coopetition, right? And that's the beauty of the payments industry and the ecosystem. And one of the reasons why a lot of people like to stay in this ecosystem. Mo, what are your thoughts?
Two comments, I guess. First of all, it's your comment made me think of, so a few months ago, I'm not compliance, I'm part of the banking partnerships team, but I work really closely then with our bank partners, which means working really closely with compliance and all of that. And I was talking to my manager a few months ago, and I feel like so often people come even on our side and they have ideas, and I feel myself going, no, I don't think that's going to work. Or have you thought about this? Or have you gone through this process? So I was talking to my manager. I was like, I want to be this, I want to focus on innovation. I want to come up with these cool ideas, and I feel like I only shut them down all the time. And he was like, well, you know what? That's innovation, in a different way. So I looked at him. I was like, that's not true, but thank you. Anyway, no, but I think the last comment I want to make on that is just, I think it's important to focus on what you do best rather than doing everything. So, to both of your points, I think, banks are really good at this piece and also what you were saying, and then fintechs are good at that. So working together and doing what you do best rather than trying to do everything, I think is a good approach.
I think that is the best advice. That is the best advice. So with that said, I think we might have a minute or two to take any questions, if there are any from the audience. Over there.
Thank you. In that aspect, the landscape between banks and fintechs, now I see that all of you are between relationships, partnerships. How you see Latin America? Because I saw some news 3 days ago where Citigroup was investing in a Latin American fintech. So are you, open to start making that type of relationships and partnerships with Latin American fintechs?
Do you want to take that, Esteban?
Yeah, absolutely. So we definitely see emerging markets and emerging payments and use cases as a pivotal business case for our embedded and faster payments. So short answer is definitely yes. I think that South America, Latin America, and Central America, those are markets that will continue to grow. When you look at some of the fintechs in Uruguay, such as dLocal, in Argentina and Uruguay, such as Mercado Libre, I think that it's becoming clearer and clearer that the financial market, especially because of the underserved and underbanked population in those regions, that is a market that is ripe for growth. And I think that, to your point, you have seen banks, companies such as Cities and others making investments because that is a region that I think is going to be the next, one of the next fast-growing regions. Now, ironically enough, in South America, they have been doing faster and instant payments actually for quite a while. They're just doing it in a little bit of a different way. So I think that there's a lot of similarities that we can quickly use to reach those markets.
Awesome. Well, thank you for that. I think we're at our time, so I want to thank everyone for your attention, your participation today, and also like to thank our esteemed panelists for your contributions and your expertise. Thank you.